Chris.
What's up, man?
Hey, Chris, can you hear me?
I hear you. Can you hear me?
What's going on, brother? How you doing?
Good, good, good.
All right. So, thanks for joining us. I want to talk about a bunch of different things, mainly the coronavirus, some of the impact that it's had on the market. Obviously, if people who don't know, Chris is one of the principals for Sunnyside Title. They're a local title agency out of Hackensack, New Jersey. One Kinderkamak, I believe it is.
Mm-hmm.
And yeah, I've been working with them for quite some time. Chris and I go quite a long time ago, and really wanted to kind of get your take individually, and then we'll kind of go over things on my end from the mortgage lending side, 'cause it's been a big impact. But what have you kind of seen on the real estate side, with title applications, title flows? I'm sure some of the applications that you guys probably took, were they getting retracted for loss of job, so on and so forth. Kind of let you take over.
Yeah. So, ever since everything went down, our industry, as everybody else, we've taken a hit. We've seen a slowdown, but not to the effect of where I thought we were going to be. I'm actually, kind of happy. I think it could have been a lot worse. Now that we're about a month and a half into this thing, and we're still doing business. It's not as much as we were doing in the past. I mean, this year we were looking at 2020 to possibly, I've been in the industry 14 years now. We were looking at 2020 to be, our best year, because January and February were actually very good, where usually it's not January and February.
Mm-hmm.
And it was a good month. It was a good couple months, and so we just thought this summer was going to be, this summer was going to be phenomenal. Not expecting something like this to happen. So, but we are still doing business. Definitely, a lot of deals have died off. Like you said, people losing their job. That question of when are we going back to work, and so we've definitely lost some deals, but deals are still coming in. We're able to process. It's a little bit slower though to process the title work now, because a lot of counties are down. Like say counties closed. It's just closed.
No skeleton crew, nothing.
No, so we have to do a lot of back title work through my searcher, and get creative on certain things, and get old owners policies to make sure that we could cut down the risks there. But other counties are open. They're just again, like everybody, working on a smaller capacity. Everyone furloughed, or it just is what it is. And so it's taking a little bit longer to get searches back and get title out. And like the mortgage industry, the underwriters in our industry are adding certain language now, COVID language, wanting to have some sort of gap insurance, stuff like that. Some underwriters are asking for gap insurance to protect them from when stuff gets recorded, because that's another problem we're having. Recordings aren't being done in a timely manner. Insurance policies are not going to be issued in a timely manner. So we have all that going on, but we're still able to process. Every deal is a little different, and our guidelines are, I'm sure they changed a little bit. I'm sure by another week or two they'll change a little bit more. I know the mortgage industry is probably changing hourly their guidelines. So we're all affected by it, but for the most part it's better than I expected it to be. So that
now you guys are still closing, right?
Yeah, we're closing deals. Just not to the capacity that we're used to, obviously.
Yeah, I think the big thing. So I was reading an article the other day. So the buyer's demand right now has, in my opinion, personally, with some of our file flow, it's always a seller's market, right, around the springtime, because we obviously have a lesser supply. Sellers have control. I've definitely noticed, at least from my personal perspective, with my team of loan officers, we've actually been getting a lot more contracts in because of there being less competition.
Yeah.
And obviously, you being one of my top title companies, you've seen the flow as well. How have you guys been getting? So I could talk on the mortgage side, right? You guys have probably been getting a lot of refinance.
That's picked up, yeah.
Right? So I think
That's picked up.
that probably counteracted more than the new purchases. What have you also seen from adjustments on the realtor side from closings? Like I've seen some title companies where closings are happening in garages, um, closings are happening in cars, and so on and so forth. Are those kind of the adjustments you guys are having to make with your closing agents?
Yeah, of course. For a refi, usually the way it works is, we'll go to the person's home.
Yeah,
Under circumstances, nobody wants anyone in their home.
sure.
Understandable. Like I said, I actually did one for somebody I knew a couple weeks ago. We did it in his garage, actually. It's funny you said that. We did it in his garage. We signed and we got it done. Everyone's very understanding right now. They get it. So, we're doing a lot of our closings in our office. It's kind of like, it's kind of like a safe ground where we can keep everything clean and everyone can wear a mask. And we're asking that just, for like a purchase, we're just asking just the buyer to come and their attorney.
Yeah.
And now even attorneys aren't even showing up. Really, the buyer attorneys aren't, we've had a lot of deals where the buyer attorneys aren't showing up. We're actually putting them in through Zoom. They'll sit there with the buyer on the desk, on the table, just sitting there, go over what they need to go over just for their comfort. And, everyone's been very understanding for the most part, coming to our office. Nobody wants anyone in their home. So I have a refi today. The guy, he was in Tom's River. I called him up. I'm like, do you want me to come to your house? We can if you want to. I have someone that will go to your house. I said, no. I'd rather come to you guys. I don't want to make anyone uncomfortable. I don't want to, and he's right. And I'm right. And, so we're closing. We're closing.
Have they started doing, and I'm curious to see, do you think closing packages are eventually going to be switched electronically?
I think some states are.
The old school.
Already. Yeah. Right now, well, they did sign, they passed that one law, temporary law where, it could be done virtually. That's still like, kind of like everyone's like, okay, so like, how is this done? We still can't sign documents via, electronically.
DocuSign, whatever, yeah.
We don't have that in our industry yet. Could it happen? Probably. It's probably going to happen sometime down the road. I don't know if they want to make it, I don't know if they want to, go down that road where it's always done that way. But right now we're even able to do it virtually, where I believe we haven't done one yet officially, but where I guess it's got to be on Zoom or something where it could be recorded with the notary there, and that they're seeing the client sign, and then they'll send the docs back to us. Again, it's something that it's doable. It's not impossible. This is a temporary thing, we hope, and it's not the norm, but whatever we got to do to get it done, we don't have a problem with that. Because the only way people make money in our industry is when we close.
And so real estate, I think.
Yeah. We don't close the deal, no one's making money. So we understand we got to get it done anyway.
Yeah. So I'm curious, what's your take on some of on the mortgage side, right? There's obviously this misconception or misunderstanding of forbearance, right? So I think a lot of people, especially if I'm not mistaken, if it's a government loan, I think the only option you have is to go forbearance. There is no deferment, right? Because FHA or VA or the USDA is insuring the loan. What do you think your case on that? Because personally, I think we're going to see a lot of foreclosures. I think the foreclosure market is definitely going to take an uptick. And in my opinion, I hate to look at it that way. There may be a higher supply out there. Loan modifications, so on and so forth, are going to be definitely a thing. What's kind of your input from a title real estate, been in the game for over 15 years?
So, my understanding is every bank is different, like you were saying. So some have the forbearance, some have the deferment. Forbearance, for me, in my opinion, it's kind of a joke. It's just like, if you can't make your payment now, how the heck are you going to be making 3 times that every month?
Yeah.
So, if you can afford it, pay it. If you can't, that's a different thing. If you really can't afford to pay your mortgage, you're in trouble. And you're going to have to figure something out down the road. But, I feel like by them opening up this forbearance thing, it will lead to people probably, foreclosing or getting their credit hit when they're, in 4 months down the road when they have to make payment. Because a lot of people don't understand it, unfortunately. And just because you write it out and put it in put it on, the news, and then you put it on your websites, people don't understand it fully. And it sucks. A deferment will be better where, if they're going to say, let's take 3 months and just add it to the back end of your loan, that makes sense for people. I get that. That will help people, but this is not going to help. Forbearance is not going to help anybody. If you can't make your payment now, you're not going to be able to make it in 4 months. It just doesn't make sense.
So essentially, just to recap, so with the forbearance, basically, if you can't afford your mortgage, let's say really it was April, right? So your mortgage payment was due April 1st. They give you the 15-day break, depending on whatever mortgage agreement you have, but usually the 15-day break, which was basically 4 or 5 days ago. So if you haven't paid April, May, and June, from my understanding, now in July, you owe essentially April, May, June, and July. And if you don't pay that, then you essentially will start foreclosure proceedings and so on and so forth. I think this is probably going to create a huge backlog with the judicial system, because it's already backlogged from landlord tenant. I know some rental, in general, the rental for landlord tenant proceedings have been basically placed on hold. So I'm curious to see how that portion also affects some homeowners regarding investment properties. Because if the investors are not collecting, landlords are not collecting money from renters, that's curious to see. I know there's a bill currently floating around that was introduced by the Democrats where they're looking to possibly give automatic deferments. And then also like a $2,000 a month payments for the next 12 months. I personally highly doubt that's going to ever get passed. It took us, I think it was about a month to get the original stimulus, the $2 trillion package to get passed, and that was only $1,200 individually. I don't think $2,000 a month realistically for 12 months is going to last, but I have kind of taken this coronavirus a little lightly in the beginning, and it has kind of taken a change. I was reading the other day, buyer's demand, like I was saying last week, actually dropped 25%, which sometimes would be looked at as a negative thing compared to last year. But the week before it was 36% compared to last year. So that's probably one of the positive things I would definitely say, is that there's a little bit more movement in the market. I was looking the other day, there is approximately a uptick regarding some of the adjustments. Are these deferments interest free? So Yanni, it really all depends on the agreement that you have with your lender. Every single institution is going to treat them differently, and really it's the forbearance. So when you pay your mortgage, you don't just pay a mortgage, right? You typically pay what's called your PITI. Your PITI is your principal, your interest, your taxes, and your insurance. So you're always going to pay your original principal. You're always going to pay your interest till the life of the loan. Then you're going to pay your home insurance, and then you're going to pay your property taxes. Now, on top of that, if you have a conventional loan under 20% of equity or 80% loan to value, you have to pay in addition mortgage insurance. So to answer your questions regarding the deferments, from my understanding is that, say for example, you owe a $3,000 PITI. At the end into the 4th month, if you go into the forbearance, you now owe $12,000. I don't think they're going to compound the interest on top for those 3 months, but I would definitely double check with your lender, if that makes sense. Because I know some guidelines are changing. Personally, for me, I have currently a contract right now under contract. Client's got a 634 credit score, FHA. But there's also been some talk, Chris, you could correct me if I'm mistaken, where some FHA actually supposedly was increasing their minimum standard to 640.
Yeah.
So I ran DU, which is desktop underwriting. It came back, it approved it, and we're good to go. Once DU picks it up and everything that I've personally put in there attests to it and it's correct, then you've basically got the green light. Chris, another thing, since you've been in the game, like you said, for I think it was 14, 15 years, you've obviously went through the crash. uh,
Hmm.
12 years ago.
Yeah.
So I personally wasn't in the game. I was in finance, but I was running a car dealership. So the car dealership, there was definitely an uptick in interest rates, but obviously nothing compared to the real estate market, right? So in your personal opinion, what do you feel like the crash of 2008, because that's what everybody refers to, right? How do you feel like that crash of 2008 is currently related to this one? I don't look at this as a crash. I think the Dow last I checked was at 26 or 27.
Mhm.
I could be mistaken, maybe even 24. Honestly, I stopped watching live TV with CNN because my wife has constantly been looking at every single day increases of people dying.
Yeah. No.
I just couldn't take it. I didn't have the heart. Now I just get the updates with the market, and I see upticks, and I see it pointing in a good direction. So how do you feel like the comparison between the market crash of 2008 as opposed to kind of what we're going on right now?
So yeah. So that you know
I
back in
think there's like
2008.
six questions in there, but
So that back in 2008, what happened there was we over leveraged ourselves. The banks were just lending out, to everybody. I mean, I remember buying a investment property back in 2007, and I was approved for a mortgage in about a week and a half. I
yeah,
didn't even like show them anything, and they're like, "All right, here you go." And I was all right. It was a 7.25 rate, but but it was a flip property that I was buying, so it worked out for me. But that was, that's how big of a joke it was back then. They really even didn't verify anything, and they gave me a mortgage, and I was, 22 at the time, 23. Um, so yeah, I mean, the big difference from what happened then and what's happening now, I right now I could what scares me is that if something happens to the mortgage industry going forward,
hmm
that then we could see what happened then happen now. So they do. I feel like, I know it sucks, but I do feel like the banks have to tighten up right now, because not all working. So how are you going to give someone a loan if they're not working, or you don't know when they're going to go back to work? So you know that's the only difference there. I mean, we can't get back into that where everything crashes again. Have the mortgages crash, then we're going to have, in the real estate market, then we'll have, a big downturn. Right now, if things stay the same and we can get out of this, virus, get back to work sooner rather than later, I think the market will be okay. I think the real estate market will be okay. As long as rates stay down, people are going to have to get more realistic with their pricing of their homes. I think, if people don't think, that if people think they're going to get what they got a year ago, I think right now, I think that's, you're kind of over, you shouldn't be listing your home. You got to, it's a buyer's market right now. I was talking to a couple of realtors, one of my better realtors the other day. He's like, you know what? It's a buyer's market, and the people that are serious, they're going to buy, and they are buying. If they have a job, if they have, they're making money, or they have money, and it's their time to go put, some contracts together and see if they could
hmm
hit. Because, if you're looking to sell right now, you got to understand what's going on, and you got to be realistic. And, so.
I think I mean that's perfect. The 2008 crash, in my opinion, was driven by what? It was driven by the housing market, right? The
Mhm.
lenders were essentially making bad loans.
Mhm.
There was obviously no verification, like you said,
Yeah.
assets. As long it was the era where if you had a heartbeat, you
Mhm.
got a loan, right?
Mhm. Yeah.
Um, I this is why I'm a little skeptical, because I kind of see the the market today is definitely different than the market was in 2008. And I think extensively the biggest thing is what? The home prices, right?
Yeah.
So there was easy access to mortgages, and before that, the home prices were skyrocketing. I think right now home prices have more or less plateaued. Obviously, we can't really judge a month. I think it's been about a month or a month and a half since we've been through this. But there was really like no dysfunction to the banking system as of right now, right? Uh, there's been some changes. Some lenders, Chase increased their minimum 700 credit score, 20% down. Chase doesn't want to lend on other loans. Again, they could. I don't know. I don't want to talk about their guidelines. But other banks, the margins have been a little different, but I think loan officers and branch managers like myself, we've been making the adjustments to get these loans pushed through. So that's why I really don't look at this as a recession. I think I was reading the other day, out of the last 5 recessions that we've had, 3 of them actually house prices increased, as opposed to went simultaneously with the market. So, but again, the biggest issue I think that we're running into is the question of the client losing their job.
Mhm.
Because unfortunately, that's the one thing with this coronavirus, since it's an outside pandemic with no control, is I think the only uncertainty in this market, right? Because listen, Dow at one point, I just checked, it's at 23.7 right now. So 24, it closed off. So still right there. But I remember, I think 2 weeks ago, it went to 18. So just think of it like that, in a matter of less than 2 weeks, we bounced up 5,000. So we definitely have the capability, the capacity to do it, to bounce back. It's just a matter of kind of getting the certainty. I think if the market does open up in New Jersey, New York specifically, because I think New York has a very, very strong hold on the entire economy, then we should probably be back to normal, or so to say. Now, we're always going to be different. I was at the grocery store today. I had to put on the mask and the gloves and the whole 9 yards. But if that's going to be the norm and the market gets back, I'll take it.
Yeah.
What are some of your other opinions in regards to this? How do you feel like about the stimulus package, without getting too political, but kind of the stimulus package that went through? Good thing, bad thing, could have gotten more. What's your personal opinion on that?
Well, living in North Jersey, $1,200 isn't much, but I'm glad they did something. It's more of a mental thing.
Mm-hmm.
The good thing now is no one's going out. No one's really spending money to begin with. So the people that need that money, I think that will help them a lot. The people that don't need it, maybe will help them mentally. So
pay some credit cards off.
Yeah, pay some credit cards off. Kind of relieve their anxiety, relieve their stress. Yeah, I mean, you see other governments, other countries giving out much more money, but that's not going to happen in the United States. We know that. And but something is better than nothing. And people will start getting the unemployment, and then they're saying they're going to tack on another 600 there. As long as this is all temporary, I think it's all good and well. As long as we can get back to work sooner rather than later, people start getting their jobs back. Certain industries aren't going to be able to pick up right away where they left off. Obviously, I think retail and restaurants are going to have a tough time. It's going to take a lot of time for people to get comfortable being around others, and we got to just deal with that for the time being. But yeah, I mean, stimulus could have been better, but something's better than nothing.
Got
right
it.
now.
Okay. Some of the adjustments that you've seen from the realtors end, right? So at one point they weren't allowed to show at all,
Mm-hmm.
and then Governor Murphy, the other day, I think it was April 6th earlier, allowed them now to do one-on-one showings, and then kind of made the adjustments. I've definitely seen an increase there's this feature now for 3D homes.
Mm-hmm.
I think I was reading the other day, Zillow showed an increase of 408% of people utilizing it. And then Redfin and Realtor.com showed like a 500% increase. What do you feel like some of the adjustments on the realtors end? Do you think, I know a lot of realtors who are just adamant they just don't want to show.
Yeah.
It's just, listen, I understand they're taking the precautions of themselves and their families and so on and so forth. What have you seen? Virtual final walkthroughs, things like that, kind of taking the adjustments, or what adjustments are you guys doing on title end, similar to what we're having to do on the real estate and mortgage?
So yeah, I mean, the 3D walkthrough, you see that stuff, and the virtual walkthroughs, you're seeing that. I mean, and like you said, a lot of realtors, they're taking the stance, I'm not showing any homes. I think I heard that more in the beginning of this, about a month ago. People are like, all right, I'm not gonna do anything, I'm gonna stop. But as time goes on, you gotta adjust, and this thing is day by day. We don't know if we're gonna be back to work tomorrow. We don't know if we're gonna be back to work in 2 months. So you know, we all have to work. We all have to make a living, and people will adjust to that. And some people may be more aggressive about it. Some people may not. And the 3D thing, I think is great. I think it's a nice thing to have now. I don't think that's going to be the norm. People still need to go in and see homes and touch and feel, and pictures online. You see some pictures online for a home, and you go, this is beautiful, and then you get there, and it's like, man, this is the same house. So, it's tough to gauge in that sense. You do still need to see a home, but final walkthroughs, stuff like that. The realtors I believe are still going to the homes. I don't think the buyers are as much.
Yeah, so especially the last 2 weeks when they're able to do it with the one-on-one.
Yeah. But a lot of attorneys are, doing, escrows now and saying, all right, let's hold some money. Let's hold some money here to just make sure that since we weren't able to do a full walkthrough, let's just hold some money. And everyone's been pretty understanding about it, like with the, certain like COs and stuff like that. It's been hard to get COs on homes. So a lot of our deals, we're seeing the attorneys saying, okay, let's hold some money in escrow, a couple thousand, 3,000, just to until we can get that CO done from the town and make sure everything was done correctly. So it's like a trust factor here where you don't want a headache down the road.
Sure.
So if you're selling your home, in this day and age right now where people can't really see everything, you got to be open and honest, I think, and and take it from there once we're back up and running fully.
Okay. Where do you kind of feel like this is going to kind of gauge over the next month or so? Do you see home prices kind of going down? Do you see them kind of plateauing in the meantime? I know it's tough to gauge.
Yeah, I mean, it's tough to gauge. I mean, I think if your house has been on the market before this all happened, yeah, you're going to have to lower it. I think that's for sure. I think if you're planning on putting your house on the market, you better be realistic with everything going on and understanding that. So yeah, you're going to see lesser homes on the market probably until people feel more comfortable with everything going on. But people got to move. If you got to move, you got to move. If you need to buy something, if you need to live somewhere, you need to live somewhere. So that's always going to happen. I don't know where that's going to go. I hope we don't take a huge hit. I don't think we'll take a huge hit in pricing and home values. As long as we can, have a game plan with this virus and have an understanding of what's going to happen in the future. I mean, that's been everybody's worry, right? No one knows what's going to happen in the future. No one knows what tomorrow's going to bring. This thing is changing daily. This virus, everyone thought we'd be back to work by now, and we're not. And so, it's just a wait and see.
Got it. Okay. All right. Yeah. On the mortgage side, like I said, mortgages are still getting closed. Underwriters are definitely a little bit more stringent. Actually, all of our files now have to go through quality control. Every single file that we have within the company. This was usually kind of fixed with some new loan officers when they first got hired. We'd go through the first 3, 4. So that's kind of some of the expectations. But again, my team and I are gauged to that. So if I know I've got a closing in 10 days, we're getting our clear to close by then, and then shooting it in to QC to kind of do this.
I mean, you got to do that. You got to be proactive right now because someone may lose their job in a couple of days. So you want to get that deal closed. I mean, it's. I have a deal right now where we were supposed to close 2 weeks ago, and the lender just kept on changing their guideline every day, and then
Yeah, it gets, and it's so important. I'm such a firm believer in working with the right people, whether it's the realtor, title, lender, and I think the main person whose guidelines change, you said it earlier, is it's me. It's the lender. We're constantly subjected to the market, constantly subjected to a lot of different changes in industries. Khalil mentioned the COVID-19 for the realtors. Yes, that's true. There are some. We actually also, Khalil, have our own COVID-19 disclosure that must get signed by a client before we fund. This is, I don't know, I assume this is a company policy thing. I don't think it's a Fannie Mae or a national guideline, but basically stating that you are still working and you're going to have the capacity to still pay it. Because at the end of the day, right? And I think this is why the 2008 and this crash, and well, not even this crash, it's not a crash, but the change in the industry is, I think we learned so much and we got smacked so bad in 2008, 2009 that the lenders have definitely tightened up. Now, are there still some bad loans that slip through? Sure, of course, we can't catch every single one, but I definitely know that there are precautions. I've been seeing, like Khalil said, COVID-19 disclosures actually coming in with the contracts, and at the end of the day, we'll make the adjustments that we need to do, kind of monitor this from there on, and take it from there. Alrighty, Chris, it was always a pleasure.
Yes.
Again, guys, Chris Kaloff with Sunnyside Title. He's tagged in this video. You guys could follow him, like his page, whatever. Reach out to him. Been in the game for quite some time. Very, very good friend of mine. And any questions you guys have, we'll definitely address them. You can always comment later if you guys see this later on. And we'll be more than happy to kind of address them and take it from there. All right.
Thanks, Abdallah. Appreciate your time, man.
You got it.
All right.
I'll talk to you guys soon.
All right. Bye-bye.